In this session, let us understand what are the innovations in receivable management. See, the first innovation is re-engineering the accounts receivable process. And that is possible by incorporating the modern business approaches like having centralized receivables management for high nature accounts so that a dedicated focus can be had on those accounts, and alternate payment strategies can be developed so that the accounts outstanding will be less when there are number of payment alternatives available. So what are the available alternatives for making payments? It's in many numbers, but having number of payment alternatives itself will act as a marketing tool, and the major payment alternatives available are having a direct debit, also having an integrated voice response, which can be either human resource based or computer based, wherein the payments can be collected through credit card. And the third possibility is having a collection by third party, wherein the task can be entrusted to a firm who will go and collect the cash or check or electronic fund transfer or card, and it can also be entrusted to banks who will have collection of check on behalf of the customer. And the fourth possibility is having a lockbox system in regional places so that an authorized person of the customer will collect the check, probably the banker will collect the check, and the funds will become usable funds within a short period of time. And the final form is having the payments via internet. So these are all the payment alternatives which is going to help to have control over receivables, which would eventually reduce the gap between the collection and the time the funds become usable form. And the other one which is evolving of late is having customer orientation, wherein a case study approach can be followed for customers so that the customer's requirement would be specifically studied, and based on that a strategy can be formulated. So we have understood what are the aspects in re-engineering of accounts receivable. Now let's move on to the next parameter or next factor in innovation, which is evaluation of risk. See, risk is the major component in debtors because unless other current asset where there will be some tangible backup, in case of debtors we don't have tangible backup, we have to rely on the people, and if they don't pay, it's a huge risk. So the risk should be assessed properly and effective control should be created and they should be implemented so that the inefficient practices are removed. And for having better control over these receivables, the latest technologies can be made use of. What are they? One is e-commerce, where we can make use of the computer and e-telecommunication like EDI, email, EFT, then e-catalog, so that we have control over receivables. And we can also have automated accounts receivable management system which avoids the manual system and updates all accounting records and also helps in tracking receivables. The next innovation is receivables collection practices. See, the objective of receivable or aim of receivable management should be to reduce, control and monitor the receivables, but at the same time the goodwill should be maintained. Because of your management, receivables management, the goodwill or reputation should not be affected. But at the same time, we also should ensure the receivable collection practices does not lead to a delay, because it would lead to increased cost as well as bad debts. So what is the major process in receivable collection? One is issuing invoice, then having open account, then fixing the credit terms for the customer, then issuing the periodical statements to the customer, and having the payment incentives and penalties. When he pays early, giving incentive, and when he pays with a delay, penalize him. Have perfect record keeping and continuous audit, and in case of need, outsource the recovery to factoring or BPO. We also can make use of financial tools for innovating on receivables management. So what are the tools that are available? Number one is credit analysis. In credit analysis, we will analyze the credit worthiness of the customer on the possibility of bad debts, and we will also see what is the credit rating of the customer. Credit rating serves as a tool regarding the credit worthiness of the customer, and we also try to get the credit information of the customer through trade reference, from bank reference, through credit reports, published financial statements, as well as through personal discussion report, that's called PD report. So credit analysis is one good tool in managing the receivables. The other one is having a decision tree analysis. In decision tree analysis, we will understand what is the cost and benefit of having this debtors, or what is the cost and benefit in giving or extending the credit period. See, if a debtor pays you as per time, what you get is profit, and if it doesn't pay, what you are going to lose is your cost, as well as there is going to be an opportunity loss. So we should know the chance of the customer paying and not paying. So we should know the chance through probability distribution, so that we'll get to know what is the net benefit of giving credit to a particular customer. We'll take a simple example to understand this. Credit evaluation through decision tree. Let's say there's going to be sales of 5 lakh and its cost is 4 lakh, profit is 1 lakh. And if this sales is made on credit terms, the chances for recovery is 90% and chances for default is 10%. So if you're going to give it on credit, 90% you would recover this 5 lakh. And if you don't give, you don't get anything. Fine. So how credit evaluation should be done now? There are two options. One is grant credit, the other one is don't grant credit. If you grant credit, what happens is there is a possibility that he will pay and it is 90%, and there is also a possibility that he will not pay, which is 10%. So what is the possibility of paying is 90%. If he pays, what is the amount you will get? It is 1 lakh. And what is the possibility he will not pay? It is 10%. And if he doesn't pay, what is the amount you are going to lose? You are going to lose this entire cost of 4 lakh. So if he pays, you will get additional 1 lakh. If he doesn't pay, you will lose 4 lakh. So if he doesn't pay, you are going to lose 4 lakh. So the credit evaluation goes like this. Either you should grant or don't grant. If you grant, there is a possibility he will pay. If he pays, you will get 1 lakh extra, and if he doesn't pay, you will lose 4 lakh. Now we have to find what is the weighted benefit of this grant. So for payment, what is the probability? You will get 1 lakh for 90% sure. So 1 lakh into 90%, which is 90,000. And you will lose 4 lakh if he doesn't pay, for 10% probability. So don't pay, you will lose 4 lakh, but the probability is 10%. So 4 lakh into 10%, which is 40,000. So what is the net benefit of granting credit? You would get 50,000. And what is the net benefit of not giving or not granting? You won't get anything. So not granting, the benefit is nil. So comparing between these two, you can grant and enjoy the benefit of 50,000. So 50,000 should be selected. So this is a simple example to understand credit evaluation through decision tree. Control over receivables is very important, because the receivables, if they are not controlled, then the levels would go up. So controlling receivables only would manage the level of receivables, so that the cost and benefit of holding the receivables can be ensured. At the same time, collection policy of the company is also equally important. There should be timely collection, so that the bad debts and average collection period are reduced. But again, this involves cost, but an organization cannot ignore the collection. So it involves cost, but that cost should justify the sales and should bring down the bad debts. So the collection process of the company should not create any resentment among the customers, but it should keep the outstandings in control. Procedures should be laid out for all the credit collection process. I mean, how long a customer can delay the payment. There should be a procedure. There should be a procedure if there is going to be a default. There should be a collection machinery for collecting, which may be either through personal call or maybe by sending people. There should be procedure for handling doubtful accounts, when to initiate legal action in the event of default. So the collection policy should be spelled out clearly.